Here's a bold statement. The global oil market is on edge, and it's not just because of supply and demand. The recent surge in oil prices has sparked a heated debate, leaving many wondering, is this the beginning of a new era of energy geopolitics? As the world watches, a perfect storm of events has sent shockwaves through the industry. Over the weekend, Ukraine launched a massive drone attack on Russian energy facilities, targeting at least 361 sites, including the Kirishi oil refinery, a major processing hub handling 6.4% of Russia's total crude oil. But here's where it gets controversial. U.S. President Donald Trump has thrown his weight behind the issue, urging NATO nations to halt Russian oil purchases altogether. This move, if successful, could significantly disrupt Russia's energy exports, particularly through its largest terminal, Primorsk, which handles a staggering 1 million barrels per day. And this is the part most people miss. The oil price hike isn't solely due to these geopolitical tensions. Saxo Bank analyst Ole Hansen points out that prices have been fluctuating between $65 and $70, supported by a combination of factors, including strong refinery demand from China and declining U.S. crude inventories. However, weaker economic data from China has also weighed on prices, creating a complex web of influences. As investors eagerly await the U.S. Federal Reserve's interest rate decision on September 16 through 17, the question on everyone's mind is, will lower borrowing costs stimulate fuel demand, or will concerns about economic growth in the world's largest economy and oil consumer prevail? Last week's softer job creation data and rising inflation in the U.S. have already raised eyebrows, leaving many to wonder about the potential consequences for the global oil market. Now let's address the elephant in the room. Is Trump's push for tougher sanctions on Russian crude buyers a necessary step towards energy security, or could it lead to unintended consequences and further destabilize the market? As UBS analyst Giovanni Stanovo notes, the situation is far from straightforward, with various factors pulling oil prices in different directions. What's your take on this complex issue? Do you think Trump's approach is the right way forward, or are there alternative solutions that could achieve a more stable and secure energy landscape? Weigh in with your thoughts and let's spark a debate.